Good afternoon, everyone. We'll just wait for a few more seconds for everyone to come in this exciting, informative webinar that we have for you for this afternoon. Also, some housekeeping items. This is a recorded webinar. So in case you have to step out or answer a phone call, don't worry. We'll be emailing all the participants today's presentation and also the recording from today's webinar. This is a good opportunity for you to get to network amongst all of our participants and also some of your business needs, some challenges that you're experiencing in your business in the realm of accounting, financial management. We have a great presenter, Lillian Bond, and that she will be more than happy to answer some of those questions and also how to connect with her and also with our business navigators as well to address those challenges as well. So I want to introduce you to Alexina Prather, and she is one of our great colleagues that I consider a great ally towards the SBDC and the community. So I want to introduce you to Alexina Prather to talk more about the Elevate District 5.
Awesome. Thank you, Jesus. And right back at you. I'm so glad that you're all here and connected with the SBDC because it is one of the best resources that Miami has to offer to our small business community. Today, I am going to speak about Elevate District 5. I actually work for an organization called Access Helps. I'm the director of that program, and I'll drop a few links in the chat in a bit. But Access Helps is an online website that helps business owners navigate local resources. So we support other initiatives and programs that happen locally, and one of those is Elevate District 5, which is sponsored and created by Commissioner Eileen Higgins. So the District 5 program is specific to an area of Miami-Dade County that encompasses Little Havana, downtown, Brickell, parts of Coral Way, parts of South Beach, kind of a central area of the county. There are 13 different districts across the county. I have a great link I'll share in a moment about how to figure out which district your business is located in. But this is one that is within Miami, and Commissioner Eileen Higgins is sponsoring this program to help share resources with her small business owners in her district. There are a lot of opportunities for business owners outside of her district to get involved as well. So I'm sure some of you might be in other districts across the county or outside of Miami-Dade. So there are resources and events like this. We're so great to partner with people like the SBDC. But just a little bit about the small businesses there. They are quite small. They typically have less than 10 employees. They create lots of jobs. These are actually facts and figures for across the county. So we have, over 80,000 small businesses, and this really contributes to the economic growth of our region. So the commissioner is specifically excited to support that community. Next slide. This is a little bit more about the actual program. I think the words got a little morphed, but I'll walk through it a little bit. This was started because of the pandemic as a reaction to the needs and the gaps that were identified during that time. So we started out at the pandemic, and Commissioner Eileen Higgins wanted to provide different kind of levels and a ladder for business owners to grow and have growth. So there are some basic requirements. This would be like the mom and pop grant, if you've ever applied for that opportunity, the business navigator program to get connected to other resources across the county. She then wanted to fill some gaps for the technology space. So we have a technology boot camp that's hosted by an organization called Prospera. We have a financial works masterclass also hosted by Prospera. There's then a lot of spaces where she's hoping to go into business growth, filling those gaps with programs like a marketing course with BizHack Academy, a scale-up course with the Idea Center at Miami-Dade College. So a lot of different opportunities to kind of plug your business into this program and figure out what you need. And then the last piece is that access to capital. So this is, the RISE Loan Fund at Miami-Dade County, or it's the Miami Foundation's Open for Business program. I know I'm sharing out a lot of names and resources. I'll definitely share more links and information in the chat. But basically the goal and the hope is to connect with as many business owners as possible in order to figure out where their needs are and where these gaps are so that we can fill them. You could go to the next slide. So this is a little bit repetitive from what I just said, but some of the goals are to really foster a supporting environment for these business owners, fill technology gaps, spur growth through skills and capital, and then just really understand our businesses. There's a strong community of businesses in District 5 and across the county. And, it's always great to collaborate and connect with each other. So I already see some of that happening in the chat, and I'm excited to learn more about the businesses that are here today. I think there are just a few more slides. All right, so these are some things that are coming up through the program. Some of them are required to be located physically in District 5. So again, I'll share that link about how to figure out if your business is within District 5. But if you go to the next slide, we're going to be hosting a whole series of events. Next week is Small Business Week, which I hope you all are tuned into and registered for at least one event. Sorry, Jesus, could you just switch to the next slide? Oh, back one more. All right, I'm gonna add a link, but there are a number of events happening next week. There are virtual events, there are in-person events, they're open to any business across the county. Really exciting. There's going to be opportunities to network, there's going to be opportunities to meet each other. So I'm going to share the link for where you can register for all of that. And I just want to thank you for letting me have a few minutes at the start to share this program. It's a great resource for business owners locally. And if you have any questions for me, I'll put my contact information. Thank you so much.
Yes, and this is the Basic Accounting in 60 Minutes webinar, and we'll be able to email you with Alexina's presentation, with the links, and also with the events that we have going on that District 5 has to offer during the Small Business Week, with the links and more information.
Thank you.
No problem. Okay. And now we're gonna go ahead and start today's webinar. And then at the same time, if you have any questions, by all means, I strongly encourage you to put them in the Q&A. So like that, I'll be able to moderate them throughout the presentation. And when it's time for Q&A, for anything that you want me to speak on your behalf with Lillian, she'll be more than happy to do so as well. So once again, I want to thank you all for attending today's webinar. My name is Jesus Padilla. I am the Manager of Administrative Services here at the Florida SBDC at FIU under the FIU College of Business. And we're working this exciting project, which is the Miami-Dade Business Navigator Program. So a brief description of what is the Miami-Dade Business Navigator Program. It is a cooperative agreement through the U.S. Small Business Administration, the SBA, in which this program is comprised as a lead hub. In this case, it is the Florida SBDC at FIU, along working with a center of organizations that deploy community advocates to assist you, the small business owners, in the recovery and the resiliency through the pandemic. The overall focus is placed on businesses owned by veterans, women, as well as socially and economically disadvantaged individuals. Along with the Florida SBDC at FIU, we have 6 other partners, in which is Ascendus, branches, the EDC of South Miami-Dade, Miami-Dade Chamber of Commerce, Prospera, and Certified Fire Procurement. All of these 7 organizations are available to assist you at no cost, and also connecting you with other resource partners as such. Access Helps, our elected officials based on the mom and pop grants, any business opportunities to assist you. Once again, we're more than happy to connect you and provide you the necessary resources. So once again, the overall focus is to create that local community navigator approach to assist the small business owners here in Miami-Dade County. If your business is located in Palm Beach, Broward, Monroe County, don't worry, we'll be more than happy to assist you. If your business is outside of the Quad County region, by all means, shoot me an email and I'll be more than happy to connect you with your local business resource partner and SBDC in your area. Once again, this is a great opportunity for you to connect with us. Visit our webpage for the upcoming events that we have going on, which is a continuous dynamic schedule, along with our email and telephone number in terms of how we can assist you and fulfill your business goals. And at the same time, feel free to like and subscribe our our YouTube channel and follow us on our social medias, as we have multiple events, resources, information to assist you. So it's a great pleasure to introduce you to Lillian Urbant. She is our business consultant from the Florida SBDC at FIU, and she'll be providing today's information in terms of basic accounting in 60 minutes. Lillian, the floor is yours.
All right. Thank you very much, Jesus. Very good introduction and learning a little bit more about Alexina, what she does with the Elevate District 5. Very interesting. But before you start, I would like to make a disclaimer. The following information is intended to provide insights in basic accounting faced by small business owners. It is impossible to cover all the areas, but this is more informative. When you have a one-to-one session with us, you will learn more information. For assistance and better understanding accounting principles for your business, it is highly recommended, go back,
Right there.
that you become familiar with the Financial Accounting Standards Board, which is an independent non-for-profit organization is responsible for establishing accounting and financial reporting standards for companies and nonprofit organizations. I want to just add something here. It is important that you understand that it is these agencies, these non-for-profit organizations, that determines and tell us how to keep the books. So if you become familiar with this two agencies and what they say, how you need to post, you will be in a safer place to present financial statements that are clear. Next. Let's start from the very beginning. What are accounting principles? Accounting principles are the rules and guidelines the company must follow, important, must follow when reporting financial data. This route made it easier to examine financial data by standardizing the terms and method that accounting must have. Who does that? GAAP, right? The generally accepted accounting principles. We follow what they tell us how to do it. Accounting principles provide us to ensure that a company financial statements are complete, consistent, and compatible. Compatible to what? That should be your question. Compatible to the industry. This makes it easier for investors to analyze and look at the useful information from the company financial statements, including trend data over a long period of time. It facilitates the comparison of financial information across different companies. When we say different companies, we're talking about different companies within the industry. It will help us, the accounting principles, help us identify and increase transparency and allows red flags to be identified and eliminates accounting fraud. Now, let's talk about a minute about what is accounting fraud. Small businesses, unfortunately, because they are just starting, sometimes they make the mistake of mixing their personal funding with the business funding. You just have to learn that you are one entity, you're one person, and your business is another entity, another person, treated as a person. Therefore, you cannot mix the financing between the two, because it can be taken, I'm not saying it is, but it could be taken as accounting fraud. Accounting standards are critical for ensuring that management, bankers, or investors are not led off track by misleading financial statements. Next. Now let's go into what is accounting. Accounting is a system of recording and summarizing business and financial transactions in a report, also known as financial statements. So whenever anybody says to you, what are financial statements? You know it has to do with the accounting in your business, and the financial statements are just reports. What are these financial statements do? It helps you analyze, verify, measure, and quantify financial information to make informed business decisions. As small businesses, we tend just to go into the bank, look at what the balance is, and just go by that. No, if we want to grow, we have to have some sort of system where we can have those financial statements. And I will talk about how to get those financial statements that would look perfect. Transactions are composed of debits and credits, and the debits and credits must equal for the system to remain in balance. I will go over what is this debits and credits that we are mentioning in here. The father of the double entry system in accounting was a monk. He was the first person to publish detailed material on the double entry system of accounting. He was an Italian mathematician, and like I said before, he was a monk, a Franciscan friar. The beauty of him doing it is because they gave us something that, although it was created many, many years ago, we use it to this day, and it's used worldwide. Debits and credits must equal to make sense. Next. We had different types of accounting. We have financial accounting, managerial accounting, cost accounting, auditing, tax accounting. The one that you're going to be working through a software program mainly will be financial accounting. So what is financial accounting? It's the process of compiling information for financial reports for external reporting. The external reporting will be if you have investors, if you're going for a loan, the bank are going to request those financials. We also have managerial accounting. That's internal. That's internal. This is for it. Managerial accounting monitors and assists an organization financial planning. It is meant for internal management rather than the public. Now, cost accounting, it's also internal, and it's for managerial purposes to see whether you are selling those products and the cost is sufficient enough to cover the sale price plus you're making a profit. That is considered cost accounting. Auditing. External auditing is the action performed by an external company for a company providing financial documentation to a third party. There's a lot of agencies and banks, depends on what type of loan you go for, they will require auditing financial statements. That is very, very expensive. And what happened many, many years ago is that CPA can do the audit, but unfortunately, because there were some issues years ago with Enron, they decided to separate it. Now, to do audits, you also have to have some license to do it. Now, what is tax accounting? What is we as tax accountants do? We assist businesses to stay in compliance with the IRS when filing their tax returns. You notice that it's not for external use, it's internal use, because your accountant is going to make sure that you do the accounting, and then we put those books in tax accounting to make sure we comply with the IRS. This tax accounting can assist companies in planning for future tax returns. In other words, if I see a tax return that says, the depreciation on the assets. Now, you're not going to be doing the depreciation in your daily financial accounting, but that's where the tax accounting part comes in, and we enter that information at the end of the year, such as understanding the implication of certain tax decisions. Taxes are very important. Any small business should be reviewing with with their CPAs or accountants the financial statements every 3 months to see where you stand as to how much you would owe to the IRS, because you want to be ready. The IRS is your invisible business partner, and they want their share of your money. Next. We also have accounting information systems. It's a company system to post transactions to store and processes financial and accounting data. I'm just going to say that the beauty of working for the SBDC Navigator program is that we also provide training one-on-one for you to use a software program called QuickBooks. We review the data and we teach you how to do it properly. This accounting information system in this particular case will be QuickBooks, so that you can maintain those books instead of Excel, because it's not going to be Excel. Yes, it can give you financial statements, but if you're looking at in a accounting information system, you are going to be able to make adjustment. You can make journal entries, and we will go over the journal entries as far as debits and concerns, which we mentioned before. For every debit, there has to be a credit and they have to balance. Forensic accounting, that's very scary because usually it does not happen on a day-to-day basis. It happens usually when something went wrong and now maybe attorneys are involved and they want to check at the books, and they hire a person, an accountant, a CPA that does forensic accounting. Forensic accounting is used to investigate the financial records of individuals or businesses. Notice that individuals and businesses. The mission of forensic accounting is to gather all available documentation and correctly and carefully account for all the transactions in the company financial statements. Sometimes it happens. Remember at the beginning, I said you have to separate yourself. The business is one entity, you are another entity, and forensic accounting is going to find that information because they're going to go through your documents. Public accounting is when a company, a large CPA firm, goes in and audits the books. And they also assist in preparation of tax return and installation of technology or computer programs. And that's where we don't do public accounting within the SBDC Navigator program, but we assist the clients set up the books. Literally, what I do is I mirror the client's computer, and I teach you how to do it. We don't do it, but we teach you, and we go over and over very slowly so that you can do it on your own in the future. Governmental accounting is completely different. Just to tell you one thing, forensic accounting, public accounting, information systems, financial, they all have more or less the same chart of accounts, but it will have governmental accounting is the chart of accounts is totally different because they are they have to follow the Governmental Accounting Standards Board. It's just one board for government accounting. And if you look at the chart of accounts, it's huge. It's totally different than a business for profit. Next. We need to talk about the jargon, how you need to learn the language used in accounting. In any business, there are 3 languages: accounting, finance, and economics. While other areas in business are important and essential, such as human resources, marketing, operations, cost, managerial, business decisions are made by interpreting the financial statements, such as the balance sheet, the income statement, and the cash flow statement. Accounting plays a vital role in running a business because it helps you track income and expenditures. ensure statutory compliance, and provide investors, management, and government with quantitative financial information to make business decisions. It is critical to understand your client, where they stand with demand, and how you will supply that demand. Meaning, if you don't know your clients, you have to learn who your clients are, what they do, how they like to do business with you. It is important that you understand your client. Next. This is general information about practical accounting habits. And this is mainly if you go with us and we teach you in QuickBooks, this is how we will be teaching you. We will teach you how to enter vendor bills and categorize the type of expense based on the chart of accounts that you have for your industry. We will teach you how to record payments made to your vendors. You'll learn how to invoice your clients, record the payments, and make the deposits. One thing that is very important, the first step is you create an invoice. The second step is to apply the payment. The third step is very critical. The date of the deposit needs to match your bank statement. Why? Because when you reconcile the books, you want to be able to go line by line, comparing QuickBooks to the bank statement, and it has to match. We will teach you how to record inventory, reconcile the bank accounts, reconcile the credit cards, reconcile petty cash. A lot of people, they have a little petty cash on hand. And they believe that they do not have to reconcile. But let me give you an example. If you have $200 in cash, and you take $10 and you buy gas, you take $10 and you buy some office supplies. That means your petty cash is going down and it needs to be replenished. So that means that you have to enter those expenses before you replenish the cash on hand. This part where it says review or reconcile transactions using the general ledger, that will be something that I will teach you to do once the books are in QuickBooks, once all the data has been posted. So that this is mainly to find errors. And it is great to do it through the general ledger because it will show you by the type of account it is, and we can find the errors right away. Manage bank fees. What I like to do with my clients on the SBDC Navigator program, I love them to link their software program to the bank because it's less work for the client, which in reality, if you're doing the books for your business, you should be concentrating in running the business, getting your clients, doing sales so that you can get some revenue in. Now, if you grow a lot, then you can hire some personnel for the accounting department. Then we have three different types of accounting. It's the cash basis of accounting, accrual basis of accounting, and the hybrid method. What is the cash basis of accounting? It recognizes revenue and expenses at the time the cash is received or paid out. Accrual basis recognizes the income at the time the revenue is earned, meaning you haven't collected, but you have a contract, whether it's in writing or verbal, you send them an invoice. Guess what? The IRS wants you to report it as income. But at the same time, if you receive an invoice, a bill from your vendor that you have to pay, you can also recognize it even though you haven't paid. That is what's called in the accounting world, and this is following at the IRS code. That's called accrual basis of accounting. There is a hybrid method, which is a combination of cash and accrual, and that will be very difficult to explain because it depends on the industry you are. So if you become our client, and we go over, the type of industry that you're in is what do you do, and all those things that we may recommend, but we will emphasize that you talk to your CPA or accountant. Next. As the owner of the business, you should have a basic understanding of the 3 key financial statements, which was mentioned before: the balance sheet, income statement, and cash flow statement. It's very easy to do it because remember the monk, the mathematician, he created the accounting equation, which says that assets must always equals to liabilities and owner's equity. And the way it is done is through a T account, where all the assets, what are the assets? I will show you another slide where it shows what some of the assets are, but it is cash, checks, accounts receivables, inventory, fixed assets. They always increase by debiting the account. Now, just so that you know, in the software program called QuickBooks, you don't see this, the debits and credits, because it just shows you a check, it shows you an invoice, but behind the scenes, they're creating the debits and the credits. And you need to learn the basics of the debits and the credits, because when you are doing journal entries to adjust, which I mentioned before, the depreciation, it's done manually. You get that information from your CPA, and we enter it in QuickBooks. At the same time, liabilities always increase by crediting the T account. Meaning if you have liabilities, money you owe to people, it will increase by crediting the account. And owner's equity, it has to be a credit, it has to have a credit balance so it matches. So when you put all your assets on the debit side and all your liabilities and all your owner's equity, at the bottom line, it should be the same amount. If it is not, something is wrong. Next. This is just an example of a balance sheet, right? This is these are at the asset side. And this is a list of all the assets that will have a debit balance in your books. And as you can see, we have cash, accounts receivable, the inventory, prepaid expenses, and notes receivables. Note receivables will be if you're lending money, if you're in the business or you decided to lend someone money and it's a note, you're going to get money from it. So that's an asset for you. Then we have the fixed assets. We have the vehicles, furniture, equipment, buildings, and land. Now, if you notice, right after all the assets, you have accumulated depreciation. That means that, let's say you buy a computer for $5,000. It will go on the balance sheet, but that asset the life of that asset, a computer has a life. So every year you are going to be able to reduce that depreciation on the profit and loss statement, but it needs to be accumulated in the balance sheet as a negative number. That's why it says less accumulated depreciation. Because when you're taking that asset from the books, you have to take out the asset at how much it costs, minus depreciation, then you will have either a gain or a loss on the sale. Then we have the second half of the balance sheet, which is the liabilities and the capital, which is the owner's equity. And under the current liabilities, it will be your accounts payables, your sales tax payable, your payroll if you have payroll, how much you owe your employees, the accrued wages payable. It is a liability, the unearned revenue. Because if people give you, if you sign a contract and they give you a deposit, you haven't earned that money yet because you haven't done any work yet. So that's a liability in your books that it gets reversed once you earn that money. Then you have short-term notes payable, short-term bank loans payable. This short-term notes payables and bank loans payable was very popular during COVID and afterwards, because people received the PP1, PP2, the SBA idle, so it hit the liability on the balance sheet until you either had to pay it back or you were forgiven. That's the only way that it's taken out of the balance sheet. Then we have the long-term liabilities, notes payable and mortgage payable. Mortgage payable will be if the business owns a property, or you bought a warehouse, let's say, where the business is located and you have a debt. It has to be a long-term liability. And then we have the owner's equity, and here says capital. So the owner's equity will be how much you contributed to the business, whether you put it as an investment or do you put it as a contribution. It depends on the type of corporation that you have. But the main idea is that it's the owner's equity. And then we have the net profit. Now, balance sheets are kept as of a certain period. It's cumulative, whereas the profit and loss is for a period. So it closes every year. The profit and loss closes every year, and that net profit, it will be what happened during that period. So then the sum of the liabilities and the owner's equity, the capital of the business, will give you the total amount that it must be the same as the asset side of the equation of the balance sheet. Next. Then we have a profit and loss, which is also called income statement. We have your revenues. If you give anyone some sales returns and allowances, you sell something, some merchandise, and people returned it, you have to put it as a deduction of your gross sales. If you sell merchandise, you are going to have this name in the books, which is called cost of goods sold. Cost of goods sold is what you buy for resale, cost of sales. If you buy merchandise, if you buy supplies and materials to manufacture something, it's going to go in there in the cost of goods sold. It's just GAAP gave us the name, cost of goods sold. A lot of people call it cost of sales, but it is under GAAP. It's called cost of goods sold. Therefore, we will keep the books the way GAAP wants us to keep. And that would include the beginning inventory, the purchases, freight in, direct labor, and indirect expenses. Purchases, like I mentioned before, is everything you buy to either resale or everything you buy to manufacture for resale. But this cost of goods sold includes the cost of bringing those materials or those items, because you have to determine how much you're going to sell it for. Direct labor, literally the personnel, including yourself, if you're manufacturing the product, it has to be part of that salary, has to be part of your cost. Now, many small businesses, what they do is at the beginning, they don't even take out a salary. They do it everything because they want their business to grow. But even then, you have to consider, if I was to get a salary, how much should I put in here? And that's where we come in and we help you. Indirect expenses, we have indirect expenses that are variable and they are fixed. It could be part of the water, depending on what you manufacture. It could be part of the electricity, part of the rent. Indirect expenses is catered to the type of industry. And we don't go into details about it because every industry is different. And even within the industry, it depends on what you manufacture. Then we have, as part of the cost of goods sold, we have the ending inventory, and that is going to give us the cost of goods, which will determine how much you're going to sell your product for. So if it costs me $10 to manufacture the item or the product or the good that I'm selling, I better sell it for at least $20 or $30. It depends on the industry. Now we're going to show you the other half of the income statement, which will be the operational expenses. Everything that you need to consider that is part of the business. And I'm going to emphasize again, I think I'm repeating this will be my third time. Separate yourself from the business. You are one entity, the business another entity. And let's say the business does not have a credit card. Well, take out a credit card under your name, but use it only for the business. So if you get audited by the IRS, at least you can prove that all the expenses on that credit card are business related. And please, please keep copies of the receipts. Do not think that just because they're in the credit card on the bank statement, the IRS is going to accept it. I have been doing this for 25 years, and up to this date, I have never seen an auditor saying, yeah, show me the credit card, and I'm going to go by what the credit card says or the bank statement says. Because the IRS wants to see on that receipt, they want to see the date that is on the receipt, how much was paid that is on the receipt. But then they want to see additional things. They want two things minimum. Who attended the meeting and what was discussed? In other words, names and what was the reason of getting together. So this is a good idea. If anything, keep track of this list of expenses so that you would consider next time you do your books. Then at the bottom, you have your operating expenses. And there's one area in there that talks about net gain and net losses on the sale of assets. The reason why it's at the bottom as other income is because you're not in the business of selling your assets unless you are. So then it will become part of the operating expenses. But that's something separate, which will bring us to either the net income or the net loss. Then the third financial statement is the cash flow statement, which is a combination of looking into the balance sheet and the profit and loss statement. And there are three activities to consider in the cash flow statement. It will be the investing activities, if the company is investing in some other activity other than what they do, financial activities, financing activities, and operating activities. So if you look at it, you will start the cash flow with the net income. And then you make adjustments to the net income. What you do is you take out the accounts receivables that comes from the balance sheet. You take out the credit card payments that comes from the balance sheet. You take out any payables, and there it just happens to be the PPP-1 payable, but it's from the balance sheet. And the payroll liabilities that as well comes from the balance sheet. And that gives you the net cash provided by operating activities. And then you add up the cash at the beginning of the period, which gives you the cash at hand for the period. So this is the same thing as when you go to the bank and you see how much money do I have to the bank. But in here, you will learn to do it without looking at the bank. If you want to grow, I mean, we all do it. We all go to the bank and say, oh, I have $1,000, I can pay this, or I can do this. But eventually, you're going to rely on the cash flow statement to do it properly. And for planning purposes, you want to know exactly where you are to grow. The goal is to grow your business. Next. I would recommend the following do's and don'ts. The do's. Learn the basic of accounting. That's where we come in and we teach you. Find an accountant that has experience in your industry. Don't feel shy when you go and find an accountant and say, hey, what industries are you familiar with? For example, I'm a corporate accountant, meaning I do all types of industries, right? Because I've been doing it for many years. But there are some accountants that just concentrate in one area, but large companies, they have the experience in all the industry. But even if they say they have experience, don't be shy. Ask them, how many beauty parlors do you handle? How many of this do you handle? So you have an idea that they have the experience that you need for them to teach you and do your taxes correctly. Find the accounting software that meets your business needs. Before QuickBooks showed up in the world, we used to have another software program, which was it was very easy to use, but if you made an error, you could not just delete it like you do in QuickBooks. You literally had to do a reverse journal entry. Do the bookkeeping yourself at the beginning to gain knowledge. In other words, I hear a lot of clients that say, oh, my accountant did it. Oh, my CPA did it. I said, but do you know why they did it? No, because I trust them. And I said, okay. If you trust them, it's okay, but you need to have the basics. You need to be able to review those financials. You have to be able to review the tax returns and say, this is right, this is correct. Because when we send tax returns to individuals or financial statements, that's the first thing we said. This information was prepared with the information you gave us. Please review it, because guess what? It's not the accountant or the CPA that signs the tax returns or those financials. It is the business owner. It is the taxpayer. So the responsibility, it's on you. Set up internal controls to avoid errors. One of the things that small businesses do is they do everything. They do the bookkeeping, they write the checks, they do the payroll. It is okay at the beginning, but if you already grow, every company should have an accounting department, which would be one person to do the receivables, another person to do the payables, another person to do the payroll, and the controller to reconcile. That way you avoid problems of people entering information, sending them to someone that does not exist, like say a payable, and you're just sending the money. If you do it yourself, it's okay because you have control. But when you grow, you want to be able to keep track of what is going on within your accounting department. Rely on your accountant to work with you to separate the accounting department responsibilities of duties. That's exactly what I just said. Have different departments within your business. Have a accounting department within your business. I understand that we start and we do everything now ourselves, but just keep that in mind for the future. Maintain records. Very important. This is what I see. People, I said, okay, where's your bank statement? That minute, while I'm training them, they go into their bank account and they pull the bank statement. Number one, it takes longer. So this is what I suggest. Download those bank statements to your computer. Keep them, because I have seen it where the bank or the client closed the bank account or the credit card and has no longer access to those financials, to those bank statements. And if you go to the bank, they're going to charge you a fee to keep your copy. So just get in the habit of downloading the bank statements, downloading the credit card statements so that it's ready to be available when I'm training you, or for your own records in case something happens. And important, timesheets. The timesheets of if you have employees, keep track of them. Do not operate without a budget. That's the beauty of the SBDC Navigator program. We have consultants that they can help you prepare a business plan, which would include a budget. Do not run your business based on your bank checking account balance, which is what I just said before. You're going to the bank, you know how much money, so you know how you're going to pay. You start working on your cash flow statements instead of just checking the bank. And use the funds allocated for a purpose to pay expenses because you are short of money, sales tax, payroll. This is what happens. You send an invoice to your client because of the type of industry you have to collect sales tax. So the client pays you $2,000, but just for the sake of saying a number, $500 is sales tax. Guess what? You are collecting those $500 for the government, for the state of Florida. That is not your money because you had to remit it to the state. So therefore, you don't have $2,000. You only have $1,500. The same as payroll. When you have an employee and you put them in payroll, you are withholding from the payroll, you're withholding federal taxes, Social Security taxes, and Medicare from their money. And plus, on top of that, you have to pay your share, which is the same amount for sales, Social Security, and Medicare, which makes it, that's not your money, especially the one from the employee. And you have to submit it to the IRS on time because it is not your money. And I think I'm very clear here saying, do not mix your assets with the business assets. Two separate entities. You're one person, the business is another person, called entities. Work on assumptions. Don't work or make the sales or do the budget. I mean, budgets can be done because budgets is something that you consider is going to happen. But if you already are in business and you make assumptions, oh, I'm going to sell $10,000, therefore I'm going to buy a truck for the business. What if the sale doesn't go through? And then you're stuck with a bill to pay the monthly payment to the dealer. Do not make any verbal contracts on important business purchases. Years ago, when I was young and pretty, it was verbal agreements. Guess not anymore. I want something in writing. I want something in writing because people change. People say, no, I didn't tell you that. So if you have it in writing, it's official. Don't wait. Do not wait to create a credit for the business, because one thing is personal credit and business credit. Go to your bank, talk to them, even if it is a prepaid credit card for the business, do it. Build the credit for the business, because in the future, if you're going for a loan, you are going to need that credit, not only personal credit, but business credit. Do not disregard your accountants and tax attorney advice on financial matters. Just listen to them, because the assumption is they have been in business, they know what they're talking about. But if you don't feel comfortable, you do your own research. Do not pay any invoices without verifying that you received the goods or services. And I have seen it. Oh, I pay, I got a vendor. He told me he was going to send me the goods in 30 days, but he told me I had to pay ahead of time. No. Get the goods, pay. Come out with the terms, but there are a lot of companies out there nowadays that they will not give you the goods unless you paid in advance. So you're in a tricky situation there. Do not enter your bills and invoices, pay bills, apply payments, and reconcile books unless everything is in the system already to make sure it matches. Next. You should be able to hire a CPA, accountant, and bookkeeper that you trust. How do you find one? Talk to your fellow business friends and say, hey, how is your accountant or your CPA, your bookkeeper? Are they good? Do you have any problems? And that goes back to you learning the basics to make sure you're reviewing the work. Also, visit the American Institute of Certified Public Accountants. And I also, just to let you know, the Navigator FIU program has a small list of CPAs that they can give you the referral to, I mean, they will give you the list, but it's up to you to talk to them and determine whether they're a good fit for your business. Review their industry experience. Like I said before, ask them, do you have experience in this field? How many clients do you have in this field? Don't be shy. It is your money. They're doing the work, but you sign those tax returns, so you have to make sure there's no audit in the future. Now you have to determine whether you're going to need an accountant just to do the tax filings. It could be sales tax, it could be payroll tax, corporate tax returns, or Schedule C as part of the personal tax return, and you do the bookkeeping. Be ready to be hands-on on financial assistance so that you learn what you're doing. Next. When you talk to your CPA, accountant, or bookkeeper, you determine who's going to be doing the work. How will you and I would get together after COVID-19, everything changed. Now, you either do it face-to-face, you go to their office, you do it through Zoom, you do it through the telephone. I have a lot of clients that they have been my clients since 2000 and even before 2003. And what they do is they send me the papers through to a place where nobody can get a hand on them, on those records. And we do everything by Zoom or phone. Since COVID-19, everything changed. How often will we communicate? That's between you, your CPA, your bookkeeper, or accountant. It is good if you talk to them at least once a month, minimum once a month, or at least every 3 months to determine, where you stand for tax purposes. And the most important one is, how much are you going to charge me? If you do the bookkeeping, how much is going to cost me per month? If you're going to do the tax returns, how much is going to be the fee you charge me to do the sales tax? How much for the payroll? But there are a lot of CPAs that they bundle everything. And they said, okay, I'm going to charge you $5,000, and it includes everything. But you still want a breakdown. And the reason why you need a breakdown is because maybe the accounting grows from maybe a couple of transactions to many transactions. And CPAs, accountants, and bookkeepers, not only do they work for their knowledge and experience, but how much time they take to manage and do your work. And it could be that maybe that person doesn't do it and they have an internal bookkeeper that would do the books for you. So you have to be very careful to find out what their fees and costs are for their services to your business. Next. Learn their language. The SBA has a great link where you can learn business financial terms, as well as the IRS website. They don't have one that talks about, what is this, what is that, but on the instructions, it would tell you exactly what form it is for. Learn their language. Do you have any questions?
Yes, Lillian, I have some. How long should we have those receipts? Keeping the receipt.
Okay. The IRS has certain dates for certain things, right? But I always say keep it at least for 7 years, because if you ever get audited, it's not going to be for 7 years. They're going to go back. So you have to keep. Now, my advice is to get those receipts and scan them. Keep the originals, but scan them or make a copy. Scan them and make a copy, because the ink on those receipts, I have seen receipts, there are nothing in there. I cannot even use it. And if I cannot prove that that expense happened, it does not go in the books. But that's just me.
Perfect. Okay. And then at the same time, I could answer these questions right here. All of the consulting services under the Miami-Dade Business Navigator, it is no cost to you. So you're never gonna get an upfront fee or commissions afterwards. No, all of the services is confidential and no cost to you, as we're funded through the Small Business Administration. And then secondly, Lily won't be able to create those accounting reports, but she will be able to provide you the tools for you to create those reports, to train the eye. Now that you have actually gotten the language, the lingo, in terms of those accounting reports, Lillian will be able to guide you through the financial management of understanding your reporting systems. Okay, and then at the same time, right here is a QR code. So in case if you're interested to meet with Lillian or with any of our business navigators, strongly encourage you to do so. As once again, it is a no-cost business assistance to you, along with connecting you with 6 other resource partners from the community to assist and grow your business. Once again, all participants will be receiving today's recording along with the presentation. So anything that we could do of assistance, strongly encourage you to register, visit our website, along with seeing you at our next events. So I want to thank you all for attending today's webinar. And if there's any questions, you'll be receiving my email, and I'll be more than happy to address those areas and connect you to the appropriate channels. So I want to thank you all for attending today's webinar, and have a wonderful day. Take care.
Bye-bye.